Hey everyone, welcome back to the Money Question. Today we're going deep into one of the hottest names in semiconductors, AMD, or advanced micro devices. This company has had a wild few years, and in 2025, it's once again positioned right at the center of some of the most important trends in tech: AI, data centers, gaming, and high-performance computing. Whether you're a swing trader, a long-term investor, or just trying to figure out if this is a stock worth watching, this video breaks down where AMD stands now, where it could be going, and what risks you need to understand before making any decisions. Let's start with the current stock position. AMD is hovering around $157 at the moment, with a market cap in the $250 billion range. Over the last 12 months, it's had a bumpy ride, not unusual for a tech company in a competitive space. But it's managed to hold a strong upward trend as confidence in its AI roadmap grows. From the lows near $95 to the current price levels, that's over a 60% gain. Analyst sentiment is mostly bullish. Out of dozens of analysts covering the stock, a clear majority are rating it a buy or strong buy, with the remainder holding a neutral stance. Average 12-month price targets fall around $165 to $180. With the more optimistic cases aiming closer to $220 or even $270, assuming AMD can continue capturing AI market share and delivering on its product roadmap. So what's fueling that optimism? One word: AI. AI is reshaping the semiconductor industry, and AMD is aggressively stepping into this space. Their MI300 series, particularly the MI300X accelerator, is designed to compete head-to-head with Nvidia's H100 chips. These accelerators are used in data centers to train and run large language models and other complex machine learning workloads. AMD has focused not only on raw performance, but on efficiency, memory capacity, and most importantly, availability and cost. Nvidia's biggest problem right now is supply. Demand for their AI chips is so high that some customers are waiting months. AMD is targeting that gap, offering chips that are competitive on performance but come with more favorable pricing and faster shipping. That alone gives AMD an entry point, even if they're not yet beating Nvidia on every benchmark. Now here's something many investors overlook. AMD isn't just trying to win in the US market. With recent export rule adjustments, they're able to send specially designed AI chips into China again. That's important because China remains a massive market for AI infrastructure. AMD plans to offer modified versions of the MI300 series to meet US export regulations while still serving Chinese demand. That's billions in annual potential revenue that analysts are just starting to bake into their models. But it's not just GPUs. AMD's strength has always been in CPUs, and they're not letting up there either. The company recently launched its Zen 5 architecture, which powers both the Ryzen desktop CPUs and EPYC server chips. Zen 5 brings major improvements in instruction per clock performance, power efficiency, and multi-threaded processing. In practical terms, this means better gaming, smoother productivity, and faster server operations, all with lower energy costs. As workloads continue to scale across cloud computing, AI, and real-time applications, this kind of performance boost matters. They also launched the Threadripper Pro 9000 series, high-end workstation CPUs with up to 96 cores and clock speeds up to 5.4 GHz. These are designed for engineers, content creators, and professionals running compute-heavy workloads like 3D rendering or simulation. These chips cost thousands of dollars each, but they fill a niche that AMD has come to dominate, especially now that Intel's workstation roadmap is struggling to keep up. And we haven't even talked about AMD's gaming segment yet. The Radeon GPU line, built on their RDNA architecture, is now competing more aggressively in the consumer GPU market. AMD's focus here has shifted a bit from just raw performance to better optimization for AI-powered rendering and efficiency. This includes technologies like FidelityFX Super Resolution, which uses machine learning to upscale lower-resolution frames into higher-quality visuals with less processing power. It's not just about selling cards anymore. It's about creating an ecosystem where AMD hardware works seamlessly across games, consoles, PCs, and streaming. They've invested heavily in open-source AI tools, optimized libraries, and deep partnerships with hyperscalers and cloud providers. That's crucial in competing with Nvidia, whose CUDA ecosystem has long been considered a competitive moat. If AMD can close the gap in software support, they'll have a much better shot at becoming a true alternative in AI infrastructure. Financially, AMD looks solid. In their latest earnings report, they posted revenues over $7 billion, up more than 30% year over year. They beat on earnings per share and raised guidance for the next quarter. Most of this growth came from their data center and embedded segments, but they also saw stabilization in PC and gaming, which had been weak spots over the past year. Gross margins are holding up, and their free cash flow is recovering after some periods of higher investment. That gives them room to continue innovating without relying on heavy debt or major share dilution. And they're not standing still. AMD continues to pour resources into research and development, new product lines, and strategic acquisitions that strengthen their long-term position. Of course, no stock is without risks, and AMD is no exception. First, the competitive landscape is brutal. Nvidia is ahead in AI and isn't standing still. Intel, despite its struggles, is trying to regain lost ground with new architectures and foundry plans. And smaller players, as well as new entrants from China, are starting to push into specific verticals like edge AI, automotive, and mobile. AMD needs to keep innovating and executing just to maintain its current share. Second, AMD doesn't manufacture its own chips. They rely heavily on TSMC, and that adds risk. If anything happens to Taiwan's semiconductor ecosystem, whether due to geopolitical instability or natural disaster, AMD would be among the companies directly affected. That's not unique to AMD, but it's something investors have to factor in. Third, we need to keep an eye on the broader macroeconomic picture. If interest rates remain high or corporate tech spending slows down, demand for data center chips and AI infrastructure could dip. That would impact AMD's revenue growth just as it's ramping up production for new platforms. Looking ahead, there are a few key dates and trends to watch. The next quarterly earnings will give us a clearer picture of MI300 adoption and AI chip revenue. We'll also be listening for any updates on the MI400 series, which is expected to roll out in 2026 and could push AMD even deeper into high-performance AI hardware. Any major design wins with cloud providers or supercomputing labs could also act as catalysts for the stock. So what's the bottom line? AMD is one of the most dynamic companies in the semiconductor space today. It's competing on multiple fronts: gaming, AI, cloud, data center, and edge computing. Its leadership team has proven it can execute. This product roadmap is aggressive but achievable. And its stock, while not cheap, still has room for upside if the company hits its targets. That said, execution is everything. Investors need to be patient, stay informed, and be ready for short-term volatility. But over the long run, AMD could be one of the biggest beneficiaries of the AI boom and the broader shift toward high-performance, energy-efficient computing. And that's it for today's breakdown. If you found this video helpful, go ahead and hit that like button. Subscribe to The Money Question for more deep dives like this, and don't forget to turn on notifications so you never miss an update. I want to hear from you. Do you think AMD will eventually overtake Nvidia in AI? Or will it remain a strong second player in a massive market? Drop your thoughts in the comments, and I'll see you in the next video.